Welcome back, guys. Today we're going to be discussing Nike stock and doing an analysis. So over the past 5 years, they are only up 6%, definitely not keeping pace with the S&P 500. And honestly, I don't really expect them to going into the future, and we'll discuss why. So they are a $136 billion company, massive company. Their price to earnings ratio of 26, which is um, kind of steep, I think, especially when you're not really seeing a ton of growth. But yeah, we'll get to that. Let's take a look at their financials. Taking a look at Nike's financials. I mean, if you guys don't know what Nike is, they sell shoes and apparel. It's a brand basically. They have grown from 34 billion up to 51 billion in the past 6 years. So actually, like looking at this, their growth has been pretty steady, pretty good. But if you look at the past few quarters, it has stalled out a lot. They have not grown the last few quarters at all in terms of revenue, and their margins are also not as high as they used to be in 2021 and 2022 in these last few quarters. Not quite sure if this is a change in tide with consumers or if this is due to some other reason. But yeah, gotta watch out for that. With growth stalling, it's it's definitely possible with them having such high revenues at this point already. They could be stalling out here, especially well, and also brands are kind of tough to invest in because consumers can change their mind on a brand very, very quickly. Now, their balance sheet looks really, really good. They only have 1.5 billion in debt. Nothing to really be concerned about. In terms of cash flow, they bought back a lot of stock last year. Probably smart, and they paid out some dividends as well. They bought back like 5 billion in stock last year. Taking a look at their statistics in terms of their margins, their gross margin is around 42%, and then their net margin is about 10%. They had 12% for a couple of years, but then last year it was 10%. And yeah, I'd say maybe they could get back up to 12%. Um, but we should probably be conservative in our numbers. All right, taking a look at the analyst estimates, we've got earnings per share of 3.3 going up to 3.65, and revenue going from 47.65 billion to 48 billion, which is only a 2% gain. And I know that this 47 billion estimate for this next year is actually lower than their previous year's revenue. In terms of insiders, this one insider, this director right here, bought $1,200,000 worth at $96 a share. And right now we're trading at what, like $90 a share? So you'd be picking it up for less than this guy. But overall, there has been more sales than buys in the last few quarters for sure. Now let's take a look at the DCF model. Now, Nike is pretty consistent, so I don't really feel the need to go through investor slides. We're just going to go straight to the DCF model here. Their EPS estimate I put here, revenue estimate here, buybacks of 4 billion. That's what they did last year or so, 4 to 5 billion. Net debt 1.5 billion, not too high, and discount rate to 10% because I want a 10% return on all of my stocks, and an exit multiple of 20. I feel that that's fair for this business, especially since it's most likely going to experience low growth going into the future. So I think an exit multiple of 20 is completely fair. Maybe even lower would be better, but it does have a strong brand, uh, and I don't really think it's going away anytime soon. Although, if we could go back to this and check out uh, Under Armour, see what happened to Under Armour, and Under Armour used to be a really strong brand as well. Let me see which one of these is better. I don't know. This one, Under Armour, and we could see how out of favor these guys fell. Wait, this isn't a good chart. UAA. This one's probably better. Yeah, this all-time chart. So you can see how much Under Armour went up here, and then it fell out of favor with consumers, and now they are trading at an all-time low. And they are only a $3 billion company compared to Nike. being at like 150 billion. So it definitely could happen to Nike. Same exact thing that happened to Under Armour. Under Armour used to be such a strong brand, but consumers just change their mind, and that's what happens sometimes in the stock market. So this is what I put for their earnings growth, 10% going down to 5%, stalling out at 5%. And in terms of revenue growth, the analysts say that it's going to grow by 2% next year or into 2025, but I think that's kind of low, and I think it's going to expand up to 5%. Mostly just barely outpacing inflation, and then profit margin of 10%. Probably going to be able to get that back up to 12%. And I think this is a very realistic scenario for Nike. And so using this scenario, we can see that the fair share price is about $68 a share if you're wanting a 10% return on your money, which is what I want. So I currently am not buying this stock, definitely not. I'm for sure staying away from this stock. The apparel industry is super competitive, and Nike has a moat, but it's not a super strong moat. And so I cannot bring myself to buy this stock at these valuations. Maybe if you're okay with getting like a 6% return, if you're okay with getting a 6% return, I think that's probably what you'd be expecting if you bought them today. Um, so you'd still be outpacing the uh, bonds, but you also have stock risk and whatnot. So that's my analysis of Nike. I hope you guys all enjoyed. If you did, please leave a like. Also, leave any comments, questions, concerns in the comment section. I read all the comments. And hit that subscribe button because I do a lot of these analysis videos and you don't want to miss the next hot stock.